Okay, shall we start? Okay, so here means even though in the last session we have discussed a number of things, right? So how you can link the direct expenditures incomes to the different accounts, maybe P&L, that is trade book, maybe balance it, right? But in this session we'll actually prepare the accounting entries from the beginning. If you take the example, let's say if you received subscription received, so what would be the accounting entry? Cash and bank account debit to share capital account credit, correct? Reason would be cash received from X investor right. Okay, so now let's say you have received cash or you have raised cash, because again you are fund manager and even though you are doing accounting as accountant as well, so you have received cash, so it means you need to invest that cash amount somewhere, right? Then let's say investment, invest that cash in assets. Assets could be equity, bonds, debentures, loans, or any other financial instrument. That all instrument combined you can call assets. So here we'll say investment in securities. Investment in securities account debit to right. Are you with me till here? Okay. So you can put a comment which is received fund invested in securities. See, when you invest from an investment date to till the accounting date, you can see the number of or I would say different activities with your investment, correct? Or maybe you can see the change in value of your investment. Let's say you had invested this on 1st of June and you're doing accounting now. You are doing accounting now. If the fund, or you're doing accounting for a fund on a daily basis, so it means the daily would be the accounting date. If it is monthly, then you need to prepare the accounting entries on a monthly basis, and if it is yearly, then you need to prepare the accounting entries on a yearly basis, right? Okay, so let's assume at the time of you have received 1000, you had invested that, but now you are seeing the change in investment value. At the time of preparing accounting entries or doing accounting for investment, you are seeing the change in value. Maybe you are seeing the value because this would be your book value. This would be but we also maintain the market value of a securities, and that value calculation process we call fair value. Fair value, it means if you sell the security today, how much value that you will receive, that value you can call fair value of securities. So it means we record the book value, which is the original price of a security, and eventually that book value you can say the purchase value. So book value you can say purchase value of a securities, and market value you can say market value, it means the current market value. Fair value, market value, or the value which that you receive after the sale of security at this point of time, that value you can say market value. And the main reason is to do the accounting for to calculate the fair value. What is the fair value? Okay, and there you can see the different process as well, and that's what will have a differentiation to calculate the fair value and all for a different securities, or to know the different process for a fair values, how you can value to your securities. Anyways, but if you take the example that the investment value now has been changed, and you are saying the value which is around fair value or current market value, which is, let's say 500, 1500. So now tell me how you can do the accounting for this 1500, because your investment value has been changed, and vice versa. What if the 1000 become now 800 due to volatility, due to risk, the price has been changed. Any guess? Increase your volume if you can, even though I would also do the same. Yeah, my volume is full. Any guess how we can do the accounting for this? So that's what your job as an accountant, your job is to do this. To calculate, to record, to prepare financial reports, to classify, to summarize. Your voice is getting very low. Use use your phone if you can. Anyways, I'm not able to hear you properly, but I'll answer it. In first case, if you see the book value or the original or acquisition cost, which is around 1000, but now if you see the current market value, which is around 800. So it means here if you prepare the accounting entries, so this situation would be realized loss, unrealized loss from the pending trades, because you are still holding the position, correct? So you can apply the accounting treatment then. Unrealized loss on investment account debit to, that is, investment account. But here you can only record the value which is you are saying the deficit, or maybe appreciation or depreciation or impairment cost you can say, but in a equity we can't say this, so eventually it would be like capital gain or loss, simple. Because now you are saying the unrealized loss on your investment, that's how you can do the recording. But what if the value this, let's say next quarter this value changed, in first quarter the value you're experiencing this, and quarter 2 let's say value has been changed, and which is around, or the value which is at 1200. So here your accounting entry will be changed. Because your investment would be in profit. Unrealized loss, instead loss you can say profit. So you may expect accounting entries on this part, then you need to answer in this way. Okay, so what if, so this seems like acquisition entry, let's say we have acquired asset and all, so in that case we can prepare this accounting entry. But what if we purchase something on trade date and that's settled in the books of account on settlement date? In that case, how we can prepare the accounting entries then? Okay, that's great. We'll cover that portion also. We have two different ways to do the accounting. One which is trade date basis, and another one is settlement date basis. But most of the institutions, they follow the settlement date basis. Most of the institutions, they follow the settlement date basis. Even though under the IFRS, we follow the settlement date basis. But you don't have, as a fund manager or fund institution, you don't have any restrictions to follow the trade date or maybe follow the settlement date basis. And even though we also means, even though most of the institutions they follow the trade date basis as well, that is depends. So which accounting treatment that you want to follow, that you can. But if you decide any method, that you need to follow to the last, the business operations of your fund. So means you need to continue that activity, so you cannot break that in between. So means for a next 6 months, let's say you have decided to follow the settlement date basis, and again after 6 months, so you have changed the method and now you're following the trade date. No, you need to select either one of the method and you need to continue. But yeah, we'll see the accounting entries under both the situations. What would be the accounting entries on a trade date basis? Let's say trade date basis. Simple. If you purchase purchase account debit to payable or Mr. X. Right? Yeah, traded basis. And other entry would be this. And you can then prepare this entry as well. But yeah, the point is, if you follow the traded basis, then you will have to prepare two different accounting entries. One entry would be on a trade date, when the fund manager send the trade instructions to the broker on a trade date. So on that date, you can prepare this accounting entry, means first one. And the second entry, trade date plus 2, which is mentioned on a settlement date. So on a settlement date, you can prepare this accounting entry. And for a sale, cash and bank account debit to, that is secure sell account, right? So cash will receive and the positions will be out and all. So that you can prepare. Means vice versa, you can prepare the accounting entry. But in the sell case, you that the record like account receivable account debit to sell, and then cash account debit to account receivable account credit. This is for a purchase. We'll write that as well. So just to avoid confusion, purchase entry. And sell of security Mr. X or receivable account debit to sell off security account credit, right? Are you there or okay? And then receivable account debit, then the second entry, this entry would be on a trade date when you sell the security. And what about settlement then cash account debit to see. So we are done with the trade date basis accounting entries for a sell trade as well as a buy and sell trade. Okay. So what about settlement date basis? See, on a trade date, no entry required. Why? Because in this case, in a second case, we are following the settlement date basis accounting entry process. Then what about settlement date, which is T plus trade date plus 2. Let's say we are preparing the accounting entry for a buy or maybe purchase. Then see here in this case you need to ensure one thing. There would be change in price, right? Let's say if you trade the security on if you put the date for example, if you purchase the securities on 28th of June and the price was around 1000, right? So when you buy the security, the price was around 1000, but now T plus 2 it means today, so the date would be 13th of June, right? On 13th of June the price has been changed, per share price. So this price has been changed and now the price is at 1200. Then in this case you need to record that the appreciated value as well, or value or loss, depends on the situation. Then in this case you can prepare the entry in this way, so it will be like combined accounting entry. Investment in security. What is the value? Total investment 1200, right? To cash and bank account credit. So let me write in this way. Okay, so why 1000 only to cash and bank account? Because actually you have paid which is 1000, right? But investment in securities as per the current date, you are seeing the value which is 1200. Why? Because there is an appreciation in the value of your investment. So that appreciation you can call unrealized gain on your investment. That is credit. So that's how you can do the settlement date basis accounting for a fund. Okay, and sir, what if loss? In case of loss, just you need to do the accounting entry in this way. Investment in security would be this. Let's assume here value would be 0 because there is a loss on your investment. and then here you can say unrealized investment. Let's say instead 1200, the value of investment is 800, but actual cash that has been or has gone from your business, which is 1000, correct? And unrealized loss on investment would be then in that case 200, and investment in security at current date would be 800. So that's how you can tally your accounting entries. Any doubt so far? Any question? Satish? So do you have any question?
What is the main difference for weightage and dividend?
See, there is no difference. The point here is we are just combining the accounting entries. Simple. Here,
We return entries for purchase for every time. For trade basis.
see, for a trade date, we require two different entries. Simple. Whenever you purchase something on credit, then how we do the accounting?
Yeah,
We need to create payables and receivables, right?
yes.
The similar way we are doing the same thing with the traded basis accounting. And on a settlement date basis, it's like a cash basis. So actually cash will be out or transferred to the respective counterparts or similar that will receive to you. So on the basis of that, you can prepare the accounting entries. Okay. Yeah. So till here we are done with the the initial accounting entries part. But what about different fees or different expenditures that we see in the fund business? If you see expenditures, all expenditures, we have a list of expenditures, right? So we have a list of expenditures, and what are those? Accounting, admin, IT, audit, tax, bank fees, custody and due diligence, legal, organization cost, other travel and entertainment, right? We have a number of expenditures. See, we have a procedure in place, accrual based and cash based accounting treatment that we follow to do accounting, even though we have discussed this in last session as well, right? Yep. So in short, as per the nominal accounting rule, all the expenses that you can debited or record at debited. And let's say if as a fund manager you have paid all the fees to the XYZ counterparts, maybe fund admin, managers, staff, salaries, lease, rent, other expenses, even custodian and all. So it means cash will be out from the fund business account. Yes, no, maybe. Then your accounting entry would be all expenses or total expenses. But instead that you can see the different expenses as well. Let's say admin expenses. Admin fees account debit 2. Management fees account debit 2. Custodian fees account debit 2. So you can see that. So we cannot narrate all the accounting entries. But yeah, so what we can say, all expenses and losses that would be debited. And then to cash and bank. Okay. So what if the fund prepaid fees? What if fund prepaid the fees for a next accounting period? You may expect question like what is meant by prepaid? Prepaid, it means the fund which has paid the expenditures to the next accounting period. So that expense we can call prepaid expense.
Yeah, that is assets, right?
Yeah, prepaid expense would be the asset.
Yeah,
But here your accounting entry would be
prepaid to bank.
total prepaid expense account debit to cash,
Yeah,
cash account, and another entry that you required, which is actual expense. Actual expense or expense account, you can say. So why this accounting entry is important? Because see, first entry that you can record at the time of paying the entire amount, and the another entry that you can record at the time of actual accounting. What is the rule of accounting? There are different rules or concept that which we follow to do the accounting, and I think this is a cost concept, which is all the costs that should be matched with that particular accounting period.
yes,
So it means, let's say if we are done with 2 days, 3 days, 4 days, or maybe one day, maybe 1 month, right? So we can calculate the fees for 1 month, and then we can do the accounting for that, and the rest amount, let's say in this case per days total fees is around 1000 for 12 months. If you split that into 360 days, so for per day the fees would be around 2.77. So you can multiply that fees with the days, let's say for 90 days, or maybe for 1 month, 2 months, 3 months, depends on the accounting cycle, which that the XYZ accounting cycle that you're following. But you can multiply this, let's say if you're doing the accounting for 2 days, 2 days fees would be around 5.555. So that you can record
okay,
under
correct.
this.
At that time.
Yeah, actual expense account debit to prepaid expense account.
Yes. Here, we are lowering our assets. That's right.
Yeah, exactly. It's kind of that the amortization something, right? So amortize your expenditures.
Depreciation.
Yes, kind of, because actually you have paid it in advance,
Yes.
but you need to consider that actual expenditures for that particular accounting period. So you may expect the account questions on this part as well, prepaid. Then I would say pick one example, split the fees, and then you can try to brief this particular questions or answers of answer for particular questions, I would say. Then what about accrual base? Accrual base, the fees which has been accrued, or maybe income which has been accrued but that yet to received.
It's not at received.
Yeah, not yet received. It will be received.
Okay.
Maybe tomorrow, maybe day after tomorrow, maybe next month, maybe next year. Depends.
Yes.
But till date, how much that we have earned? If you take the example of again total expenses, which is around 1000 for 12 months. If you split that into 360 days, for a per day, the expense should be around 2.777.
Okay.
Let's say we are done with today and we are doing the accounting, then how we can record this? Your first entry would be expense account debit to accrued expense account. And after that, you can record this accounting entry. Accrued expense to, sorry,
Expense.
not this one, that is a different thing. Then this entry,
Cash.
accrual expense account debit to cash and bank. Why? Because now in this case, so you're paying that accrual expense that you're paying.
Okay.
But in a reality, we do this in a different way. Why? Because see, every day we are preparing accounting entries, we are calculating accruals, we are posting it to the fund accounts, right? That's how the fund accountant rule is all about. So first entry that you can prepare as it is for on a daily basis for a 2.77 rupees, maybe rupees dollar INR JPP depends. But this accrual you need to reverse it. So that for a reversal you can prepare this accounting entry. Debit accrual, this will be here the accrual expense at credit. So you can prepare this accounting entry, accrual expense account debit to expense account. Why? Because this debit and this credit will be offset,
Yeah.
right? And this credit and this debit will be offset. Okay, so why we do this? So important question is, let's say today is the second day and we are doing the accounting for second day. So we cannot create multiple entries. So what we do, simply just reverse the previous one and post the new one with addition of today's accrual payment or expense, whatever it is, right?
Yes, sir.
This one that you have prepared on a first day, but on a second day we are completed 2 days. It means you need to calculate for a 2 days, and the fees would be around 5.55. So you can create fresh accounting entry, which is expense account debit to accrual expense account, right? With amount of this 5.55, and even though that amount you can add it here as well if you receive this amount, or else throughout the accounting quarter till you receive the amount you can prepare only one accounting entry. The same accounting process that we apply to the prepaid in actual or at a reality, and the same to the accrual base also. So in an accounting application or in accounting system you would expect the same. So we do that.
So,
Yeah, go ahead.
uh, in this private equity, what are the accrual expenses you can expect, like purchases,
What are the?
accrual expenses?
These are the expenses. This is the list for private equity expense. Bank fees, custody, due diligence, legal, organization, other travel. But yeah, the most of the expenses should be, that is account admin management fees. That you can calculate on accrual basis and do the accounting for your private equity business.
Before paying, we are just writing our entries, like we are about to pay.
Yes.
That is that.
Yeah,
That is accrual.
correct. If you paid it, then that you cannot treat as accrual. Simple.
We can close
Exactly, you can close it. So once you received, then you can close it. Okay, so that was all about expense. Then what about income, accrued income? In case of accrued income, so dividend, for a dividend and interest payment, you can prepare the this entries, dividend and interest payment. Debit accrued income, any if you see dividend and all. So accrued dividend account debit to income, and once you received, then you can prepare this cash and bank account debit to, that is accrued income. But sometimes they record this as a receivable also. Yes, dividend receivables, interest payment receivables, right? To, let's say, due receivables, for example. And it would be like this. And after received, so you can say cash and bank to accrued income account received, or maybe receivables account or due receivables. So in this way you can do the accounting for accrued income in case of dividend, in case of interest payment, or any other income if you are going to receive. And you are suppose let's say if you are doing accounting as accruals or under accrual base, then you need to prepare these two entries in your books of account. And what if directly that you receive dividend, then entry would be cash or bank account debit to dividend or interest payment account. Simple.
Hello. 0.01.
And after this, the last, let's say, even though we have discussed about subscription, but what about redemption? Because we have invested, we have traded, even though we have calculated expenses, we have calculated that is unrealized gain and loss, but what about redemptions? Right? So once you invest, even though we have prepared accounting entry for investment as well, but what if we received investment value back from the investment company? So in that case, we also prepare the accounting entry for that. So your accounting entry would be cash account debit to cash and bank account debit to investment in security account credit, right? Yes, reverse entry. And the important is the value, how much value that you have received, that is important, and accordingly you can record it. Let's say you had invested 1000, but you have received only 500. In that case, loss incurred on that particular investment, so you can debit the loss, record the loss, which is let's say 400, you can record it. And other expenditures, if it is incurred, you can record that expenditures as well. If it is expenditure, then that would be part of debit. In this way you can prepare the accounting entry. But what if you received high amount? Then in that case, your actual investment was around 1000, let's say, but you have received 2000. Here in that case would be 0, but the gain on asset, that you can record this. Original invest was 1000, gain on asset is around 1000, and you have received 2000 as a net cash amount. Okay? And once you received investment, then you can initiate the redemption. redemptions of units. Share capital account debit, bank account credit, total amount.
For investment.
So this cash that you have received, total cash,
Yeah.
that cash you can return to the investors and close your accounting books. After preparation of accounting entries, you can or you can create the ledger and main ledger and sub ledger. Main ledger and sub ledger, it means to create the separate accounts for a cash and bank, share capital, then the fees, different fees, losses, right? And then after you can prepare the trial balance, then trade book, P&L, balance it. To preparation of balance it means your NAV calculation in short. Or to do the accounting, it means your NAV calculation.
Yes, sir.
So we are done with the accounting entries. So do this or practice all the accounting entries as much as you can. This is a very important one, right? So we have covered all the accounting entries. Even though yesterday we have discussed a number of things about this accounting treatment and all. So I would expect that the practice from you. If you do the practice as much as you can, then definitely you would be able to answer it. Create the dummy examples the way I have created. See, I don't have any books, even though I don't refer any books, but still I have prepared this on call, right? Trust me, I don't have any books with me, but still I have created this entire accounting entries. See this. Even though I don't have mug up anything, but still I have created the accounting entries for you. So how did I create this?
Concept. We know the concept. We can.
Exactly, concepts. You should know what happened exactly. Cash received. Sometime you may expect what would be the accounting entries in master and maybe feeder for management fees. See, fees is the fees, right? Even the master also charge management fees and feeder also charge management fees. Correct? If it is fees, the same accounting entry will apply. Fees, it's an expenditure.
Yes, sir.
Then what would be the accounting entry for expenditures? We have a two ways, cash and accrual. Ask this. If it is cash, then mention the cash entry. If it is accruals, then mention the accounting entry. Or tell them the accounting entry for accruals and cash. In the both the cases, there would be two different entries, right?
Yes, sir. Anand, we can just give the accrual entries are prepaid in cash check, right?
Accrual entries.
Like, yeah, like one example. For expense, normal entry is debit all expenses. So,
Hmm.
management fees to cash. If we are paying in cash, we are just giving in entry like management fees to cash.
Hmm.
Then accrual basis, we are just heading management fee expenses to accrual account, right?
Hmm.
So instead of bank or cash, we are just in accrual basis or prepaid basis, giving prepaid or accrual.
Say this. Expense account, right? Expense account. See, as it is, expenses should be debited. Then instead cash you can highlight as accrual expense.
Yes, we are not adding any payment. Then once the payment is done, we are reversing the accrual.
Yes. And then this should be the accrual expense then actually you are going to pay. Then after this accounting entry you can record accrual expense account debit to
Will be
cash and bank.
accrual.
Simple. And let's say if you just pay the cash as expenditures to someone else, then expense account debit to cash. Cash will be impacted. So that's what I said. You should refer the 11th and 12th standard accounting book
Yes.
to prepare the accounting entries.
Yeah. They have lots of information.
Yes, already, because nowadays refer the NCRT books if you can, because they have given lots of examples and all, or entries with the lots of or different examples, which would be better.
What is the name of
Hmm?
NCRT
Yeah, NCRT.
books? That is
Yeah, books.
NCRT education written. That is
Yeah, 11th or 12th standard books.
okay. Okay.
Okay, so just to let me stop this recording.